In the heart of Omaha, Nebraska, a young boy developed an interest in business and investing. This was Warren Buffett, a name that would later become synonymous with success and wealth. Born in the year of 1930, Warren's passion for business began to manifest at an early age. Aged just 6, he purchased 6 packs of Coca-Cola from his grandfather's grocery store and resold them for a small profit. This early venture marked beginnings of a lifelong journey in entrepreneurship. By the tender age of 11, Buffett made his first foray into the world of investing, buying shares in a company called Citi's Service. Despite the initial loss, this experience served to fuel his fascination with the stock market and the mechanisms of business, teaching him valuable lessons about patience and timing. As a teenager, Buffett's entrepreneurial spirit continued to thrive. He ventured into various small businesses, from selling golf balls and stamps to delivering newspapers. Every venture brought new lessons, shaping the man who would come to be known as the Oracle of Omaha. Warren's thirst for knowledge led him to Columbia University, where he studied under the mentorship of Benjamin Graham, a renowned economist and investor. Graham's teachings became a cornerstone of Buffett's investment philosophy. Concepts such as value investing and the margin of safety were deeply ingrained in Buffett's approach, guiding his decisions throughout his illustrious career. Buffett graduated from Columbia in 1951, armed with a master's degree in economics and a profound understanding of investment principles. His time at Columbia not only honed his investment skills, but also shaped his perspective on wealth and philanthropy. The culmination of these early experiences and education played a significant role in developing the investment strategies that would later make Warren Buffett one of the richest men in the world. His humble beginnings and relentless pursuit of knowledge remind us all that success is not a matter of luck, but a result of patience, perseverance, and an unyielding thirst for learning. Buffett's early experiences and education played a significant role in developing the investment strategies that would later make him one of the richest men in the world. Now, if you want more inspiring stories like this, be sure to subscribe to our channel and join us on this journey of exploration and discovery. Warren Buffett's investment strategies didn't just sprout overnight, they evolved and were refined over time. Initially, Buffett was heavily influenced by the teachings of Benjamin Graham, the father of value investing. Graham championed the idea of investing in undervalued companies, those diamonds in the rough whose actual worth surpassed their market value. Young Buffett, armed with this wisdom, set out to make his fortune, always on the hunt for undervalued stocks that others overlooked. An excellent example of this strategy in action was Buffett's early investment in American Express in the mid-60s. At the time, the company was embroiled in the salad oil scandal, a massive financial fraud that had investors running for the hills. But Buffett saw an undervalued company with a strong brand and loyal customer base. He bought a significant stake, and as the scandal faded, the company's stock soared. Buffett's faith in the undervalued company paid off handsomely. But as time went on, Buffett's strategies began to evolve. This transformation was largely influenced by Charlie Munger, Buffett's longtime business partner at Berkshire Hathaway. Munger introduced Buffett to the concept of investing in wonderful companies at fair prices, rather than fair companies at wonderful prices. This shift in perspective marked a significant turning point in Buffett's investment approach. Buffett began to focus on companies with long-term value and strong leadership, even if they weren't the cheapest stocks on the block. He sought out businesses with enduring moats, a term he used to describe a company's competitive advantage. Buffett's investment in Coca-Cola in the late 80s serves as a prime example of this strategy. Despite being a well-known and far from undervalued company, Buffett recognized Coca-Cola's long-term value and strong brand as its moat. His investment has since yielded billions in profit. In the new millennium, we've seen Buffett's strategies continue to evolve. He's embraced companies in the tech sector, an area he previously shied away from due to his self-proclaimed lack of understanding. However, recognizing the sector's potential, Buffett made a significant investment in Apple in 2016. This was a clear departure from his previous reluctance to invest in tech companies, demonstrating his adaptability and keen understanding of the changing business landscape. These shifts in Buffett's strategies over the years are not signs of inconsistency, but rather, they're proof of his flexibility and adaptability as an investor. They showcase his ability to learn, grow, and adjust his approach based on the changing economic environment and market conditions. Through his evolving strategies, Buffett demonstrated that successful investing requires adaptability and a keen understanding of the changing business landscape. Warren Buffett is not just a successful investor, but a mentor to many. His golden rules of investment are wisdom nuggets for both seasoned and aspiring investors. One of the most significant rules that Buffett always emphasizes is the importance of investing in what you know. This principle, seemingly simple at first glance, is a call to thorough understanding. It means delving into the intricacies of the industries and companies you choose to invest in. It's about understanding how a company operates, its competitive landscape, and what makes it tick. Buffett himself is known to read extensively and spend a great deal of time analyzing financial reports. This rule underscores the power of informed decision-making in investment. Next, Buffett advises looking for companies with a competitive advantage, or what he often refers to as a moat. This metaphorical moat is a unique attribute or set of attributes that sets a company apart from its rivals, shielding it from competitive threats. It could be a powerful brand, a robust supply chain, exclusive patents, or even exceptional customer service. Buffett's investments in companies like Coca-Cola and Apple, both boasting significant moats, are testament to this rule. Moreover, Buffett's golden rule of investment is not just about spotting the right companies, but also about being patient. The Oracle of Omaha is a staunch advocate of long-term investing. He believes that the stock market is a device for transferring money from the impatient to the patient. This holds especially true in volatile markets where investors often fall prey to panic selling. Buffett's patience has often been rewarded with exponential returns on investments, such as his stake in Geico, which he held for several decades. Another noteworthy rule of Buffett is his insistence on the importance of a company's management. He often says, "When a management with a reputation for brilliance tackles a business with a reputation for poor fundamental economics, it is the reputation of the business that remains intact." This rule emphasizes the critical role that effective leadership plays in the success of a company and, by extension, its investors. Finally, Buffett's investment philosophy revolves around the idea of value investing. He seeks out companies that are undervalued by the market but have strong fundamentals and growth potential. This approach requires comprehensive analysis, patience, and a contrarian mindset, often leading Buffett to make investments that others shy away from. Buffett's rules, steeped in wisdom and experience, highlight the importance of knowledge, patience, and discernment in successful investing. These golden rules reflect a philosophy that goes beyond mere investing. They embody the principles of lifelong learning, strategic thinking, and steadfast patience. The ability to apply these rules consistently and judiciously is what sets Warren Buffett apart as one of the most successful investors of our time. Warren Buffett, the Oracle of Omaha, leaves an indelible mark not just in the investment world, but in the hearts of many. His legacy is as multifaceted as the man himself, a blend of financial acumen, philanthropy, and education that continues to resonate with people worldwide. The son of a stockbroker turned congressman, Buffett's journey from a humble paperboy to one of the world's most successful investors is nothing short of inspiring. But his wealth didn't just amass in his bank account. Buffett, a man of humble tastes, pledged to give away the majority of his wealth to philanthropy, a promise he is fulfilling through the Giving Pledge, a campaign he co-founded with Bill and Melinda Gates. His philanthropic endeavors are as strategic as his investments. Buffett doesn't just write checks, he invests in causes that promise long-term impact, much like his investment style. His substantial contributions to education, healthcare, and social issues are testament to his commitment to creating a better world, not just a better portfolio. But Buffett's legacy doesn't stop at philanthropy. He is also committed to teaching others about investing. Through his annual letters to Berkshire Hathaway shareholders, his numerous interviews, and his public talks, Buffett has been sharing his wisdom and insights, inspiring and educating budding investors. His golden rules of investing, patience, knowledge, and adaptability, are now the guiding principles for many investors around the globe. Buffett's investment philosophy, with its focus on value investing and long-term gains, continues to influence investors worldwide. His belief in investing in businesses, not just stocks, and understanding the companies you invest in has shaped the way many approach the stock market. Warren Buffett's story is a testament to the power of patience, knowledge, and adaptability in investing, a legacy that will continue to influence generations of investors.